Hey, good afternoon. This is Trader Tim from over at EminiMind, and I'm doing another Monday market analysis. It is the 8th of November, 2021. Before I jump into today's content, just wanted to let everyone know that I will be holding the E-mini Futures Day Trading Masterclass again. This will be, we did it last year, kind of beginning of December. It seemed to be a pretty big hit, and be doing it again this December. The date will be December 6th. So if you want more info on it, just shoot me an email, tim@eminimind.com. And if you can't attend, so it'll be a live, go to webinar situation where we'll have the presentation, be able to interact and answer questions and go through examples and things like that. And if you're not able to attend for the live portion, I can always get your recording. So just shoot me an email. All right, looking at today's ES price action, the daily chart, we're kind of sitting up at this negative 23. And anytime we get up to this area, a negative 23, essentially what you're looking at is the market has gone about 20% beyond the prior highs. So always looking for signs of a pullback or sideways or consolidation up here. We have this upward trend line that was connecting these lows from June, July, August, and into September. And that's this line here that I just left it on the chart. So if we do go sideways or pull back a little bit, we could just move our way towards this trend line, tag it, and then go higher. We certainly could go higher from here. There was not much negative reaction to the Fed meeting last week and their announcement to be beginning their taper. So usually in the beginning of December, we have what they call a Christmas, a Santa Claus rally rather. So if we can't get any bearish sell-off in the next couple of weeks, then there's a good chance we'll just kind of rally into the end of the year and maybe we'll get a bigger sell-off in 2022. Now, I have this next retracement drawn because if we do go lower, this would be the next area that I'd be looking for us to bounce. Around 4,500, kind of these prior highs. And if we get a sell-off like that, it doesn't necessarily mean that the market's going into a recession and we have this huge gloom and doom situation, because as long as we hold the 61.8 and don't close below it, then this is just a continuation of the uptrend. So, and these pullbacks are healthy. If you ask me, my personal opinion would be, yeah, let's get a pullback, let's get a little more volatility. All those things are great for the markets, and give opportunities to be able to put on new swing positions, add to long-term buy and hold positions, all that stuff. So as long as we keep going higher, higher, higher here, our opportunities for new trades get lower, lower, lower. And if you go back to these swing highs here, everything above this price level is essentially an all-time high. All of these green candles here were new all-time high, new all-time high, new all-time high, Friday, new all-time high. So on an intraday perspective, when I see little short setups at highs on those days where we're breaking into new all-time highs, I just ignore those. I pass on those, and that's just a way to kind of, those are not going to be as likely to succeed. So I'd rather just pass on those and look for a long setup around that 15-minute mark after the bell and try to get in early and ride it as long as I can. Now, if we do get a break of a prior day's low, like we had back here, then I would be all right with taking some longs and shorts. But in the meantime, this pattern could just end up being a bull flag where we have a strong move up and then some sideways action. Maybe we drift a little bit lower towards this trend line and then move up from there. So, I'll be watching this break of, if we can break this low of Friday, which is a 74.25. Intraday today, there really wasn't a whole lot going on. I couldn't discern much of a trend at all, so I just didn't end up taking any trades this morning. It was an inside day. We did have breadth and advanced decline line that were pretty flat. And then the other thing we had, if we look at the 15-minute chart, these candles where you have small bodies, long tails, or candle wicks, and they're on both ends, up and down. Some people call that barbed wire. That's a very choppy, difficult situation to be trading in. At the time, the candle, when it first starts to form, it might look like a big bearish candle, and then we come back up, and now it's a small body, spinning top. And so, yeah, I couldn't make much sense of the markets this morning, so I just didn't end up taking the trade. If we do that again tomorrow, if we zoom out here, you can see lower high, but then at the same time, higher low, higher low. We're basically sitting at the apex or the point, and so you'd expect a breakout coming. But if we go one more day and we end up, with another tighter range, and we're inside, definitely going to be sitting on my hands and not trying to make something out of nothing, because when you get in those triangle patterns and you get really tight and the market is just snoozing, that's when you can take some boredom trades and just you get to the end of the day and you say, boy, I wish I took no trades today, or I wish I ended the day flat, versus digging yourself a big hole that you got to crawl out of. So tomorrow morning is Tuesday, so we'll be doing another live trading session. And if you want more info on the masterclass coming up next month, feel free to shoot me an email. And I hope everyone has a great week of trading. We will talk to you all soon.